Welcome to MGAA Conversations, a new podcast channel where we'll be discussing with an exciting number of guests all things related and topical within the ever-growing MGA community. Good morning and welcome to the latest MGAA Conversations podcast. Today I'm absolutely delighted to welcome Hannah Gurga, Director General at the Association of British Insurers. Hannah, a very good morning to you and welcome.
Good morning, Mike. Pleasure to be with you.
Great to see you. So let's get straight to it. I'm sure our listeners are going to be very, very insightful in terms of what we're going to talk about. So with the ABI representing nearly all of the UK P&C carriers, including actually some of my own members, can you just share sort of both your own and your member reflections on 2025?
Well, you're right, Mike. We do represent a large part of the market, and I like to think of the ABI really as the umbrella for the ecosystem, which is why we do have some of the MGAs amongst our membership. And I think you'd probably agree that looking back over 2025, one of the themes, certainly for me, reflecting on it, is resilience. We kicked off in January with some of the biggest storms on record, and over the course of the year, we've seen some high-profile cyber attacks. And all of this taken together, I think, demonstrates how important the role of insurance is, because risk is our business, and I believe that as an industry we've got a critical role to play in strengthening the resilience of the UK as a whole. At a high level, I think we've seen some positive progress around the regulatory agenda. I certainly was very pleased with the government's commitment to reduce the cost of regulation by 25% by the end of this Parliament, but we really need to see that ambition matched by action. Turning to the market specifically, if I think about the areas that the ABI focuses on, motor insurance has really been front and centre this year. We've been participating in the stakeholder panel of the government's motor insurance task force, and I'm pleased to say that over the past 3 quarters we have seen a reduction in the average motor premium cost. That's really encouraging, but at the same time the claims costs are hitting record highs, so further work is required to keep motor insurance affordable and at the price we'd all want to see customers paying. In similar vein, we've got property premiums again declining. I think our latest tracker showed the average premium is about £385, but again, home insurers are paying out record claims. I think so far in the first 9 months of 2025, more than 4.5 billion has been paid out, largely due to storms and floods. So it's been a year of progress in some areas, but also a year where I think we need to make sure we're really asking ourselves what more can the industry do to drive resilience, and how can we work together to get the benefits of the government's commitment to reducing the regulatory cost.
Yeah, but I'd like to come back to you on that. And I know we'll talk about, but I just think that, you know, those numbers you've just shared sort of fascinating. But as you say, you know, it absolutely underlines the importance of people purchasing insurance, number one, people having access to be able to buy insurance, because, you know, we call it a cliche, you know, of us in the sector, but, you know, the test is really on a claim, isn't it? Ultimately, you know, people are basically buying insurance because it's a promise, and with those storms, and I'd imagine there's plenty crossed legs and crossed fingers in terms of the weather between now and probably March across both your members and my own members, actually.
That's right, Mike. I mean, we're seeing increased, serious weather incidents, lots of storms. My own team was down in Monmouth last week, supporting the flood response and the flood mobile, really to see on the ground what is it like from a customer's point of view. And I think they found that very sobering in terms of the effect that flooding can have on families and businesses, but also encouraging in the sense that the insurers were there acting swiftly, dealing with the customers in as compassionate a way as one would hope, but also giving them the certainty that the cover's going to be there. You talked about claims, though. The elephant in the room is the witch super complaint that was submitted to the FCA recently, and certainly for the ABI, one of the things that we're already working on with our members is what can we do to support members around claims handling in the home and travel markets. That's a key area of focus for us going into 2026. Because if I think about it from a customer point of view, it's really point of sale and claim. That's where they've got the touch points by and large with our members. So as a trade association, I think there's an opportunity for us to really understand what does good practice look like? Can we support our members to deliver the experience that all customers would expect?
Yeah, no, absolutely. So let's, you touched upon the government, you touched upon regulation. So let's get into those two areas. So interestingly, our conversation sort of coincides with last week's budget. So your views in terms of the budget, and both maybe personally, maybe from your members' perspective.
Well, for me personally, Mike, I certainly felt it was like the longest run up to a budget ever. I don't know if that's factually true, but there was so much speculation.
Yeah. No, I wouldn't disagree.
And it's the gift that keeps on giving, isn't it? Because there's still a lot of talk about the budget, even though we're almost a week after it. I think one of the things that the ABI has done is make sure that we are providing the evidence base for government as it considers what its plans are for the budget. And if I think about it from the members' point of view, I think it's a bit of a mixed picture. And I should say the ABI, we represent both the general insurers as well as the life insurers. And for the general insurers, the decision of the Chancellor to keep the rate of insurance premium tax at the same level is very welcome. That's helpful for our members, but more importantly, it's helpful for customers. In the run-up to the budget, there was also a lot of speculation on pensions in particular, and we were pleased to see that the Chancellor chose not to introduce any changes around the treatment of the pension tax-free lump sum. But of course, what we did see in the budget was the £2,000 cap on the national insurance exemptions for salary sacrifice contributions. And that's something, while we do typically try to avoid commenting on speculation, that was an issue that we and our members felt very strongly about, and we therefore sought to provide evidence to the government on what the impact could be from an employer and employee perspective. While that measure has gone through, the fact that it's not going to be implemented until 2029, I think, is a positive for businesses because it gives them more time to prepare. But overall, I think that is not the outcome we would have wanted to see from a government that at the same time is also committed to the Pensions Commission and reviewing pension adequacy, because I think we all know not many people are saving enough for their retirement. So changes to salary sacrifice are going to be detrimental for those people who otherwise might have been more encouraged to put money aside for their retirement. So a bit of a mixed picture, Mike.
Yeah, it's interesting around the IPT because probably like yourself, I attended a couple of sort of think tank sort of forums where economic experts were putting their own bets in terms of what may be in the budget and may not. Despite the fact, as you say, Hannah, what's the phrase? The rolling of the pitch had already started at the end of October, beginning of November, and actually at both of the forums I was at, there was a strong indication that because IPT hasn't been touched for a number of years, that it was in the top three that it may be actually chosen to be increased, with this new phrase, which I'd never heard before, this smorgasbord of changes. So I agree entirely. I think it was useful that it wasn't touched by the Chancellor, and obviously it probably would have fallen into, quite rightly, another increase in cost of living to the general public, which obviously was part of the mood music the government wanted to get out, that they didn't want to hurt people in their pockets. But I think your summary was excellent, really. I think it was a mixed bag. So if we look at the regulatory side, and obviously this is an area where both for your members and my members, is particularly prevalent, both in terms of escalating costs, duplication of costs. Obviously, we're collaborating together around fair value in terms of how we can sort of work together on that and reducing that. We obviously touched upon earlier around, the 25% reduction. Is it real? How can we see the roadmap from that perspective? Could I ask you just to share again, your own insight around both the FCA and their direction of travel in terms of their speed? Obviously, Matt Brewer's left. Graham has stepped in as temporary while they sort of replace Matt. And also, I'd be interested, certainly from your members and their interaction with the PRA, in terms of, how active are the PRA in looking to try and increase competition and in terms of that overall sort of sector. So, what's your sense?
I think what we've seen since the introduction of the secondary objective around competitiveness and growth, I think we've seen with both the FCA and the PRA a much stronger focus on competitiveness and what they can do from a regulatory perspective to support UK growth. It's very clear to me that the FCA is taking it extremely seriously, and we've had a strong level of engagement with them. There has been a bit of a changing of the guard, and not just in the FCA, actually. I've seen that also in the Treasury. So it's quite interesting for us. We've got to build the relationships and create a constructive relationship with all of those stakeholders. From our point of view, one of the things we wanted to do following the government's announcement about this 25% reduction in the cost of regulation was see, could we provide an evidence base to help the government with its thinking? And that's why we work with our members and Altus Consulting to undertake some analysis that showed, as I mentioned, that conservatively the cost of regulation for the insurance sector is 4.8 billion per year. That means the scale of opportunity by 2029 is to free up 1.2 billion.
Yeah.
If we can find ways in which regulation can be streamlined safely, because obviously we're very keen to ensure that consumer protections remain. And I have to be clear about this. It's not deregulation. It's about smart regulation. And I think one of the areas that I'm sure you've been looking at with your members is the approach the FCA has taken to simplification of the handbook, and how can they better differentiate the application of rules to a wholesale market versus a retail market. And I think that's very positive. When it comes to the PRA, we've seen some very important steps forward through a group that we mobilise called the Investment Viability Group, and that brings together some of our life insurers with the PRA and with the Treasury and other stakeholders to identify investment opportunities in the UK and how those might be structured in a way that meets prudential requirements under Solvency UK. So I think we've seen progress in both areas, but we're keen to do what we can to support the regulators in identifying ways in which that regulatory burden can be reduced safely. One of the things I found very interesting, actually, from the analysis that we undertook, was that the number of ad hoc data requests doesn't cost as much as one might imagine across that 4.8 billion, but it's perceived as being very disruptive by the firms because they can't predict when the request is going to come in, and it distracts their resource from their BAU or strategic activities. And I hope what the analysis we've done will enable us to do is have a conversation with the regulator, because I think the first bit is having an agreement of what is an ad hoc data request, because the figures I've seen don't marry up with what the regulator is putting forward. So there's a perception issue there. And I think that could be quite low-hanging fruit for the industry, actually, if we can work with the regulators to understand what is the information that they're trying to elicit? Is there a way that they can plan for that activity? What are they going to do with the information once they've requested it? I think that would be really positive.
Yeah, I agree. And so I think the ad hoc is a great theme, actually. And I think your other comment around what are they actually going to do with the data, because I think there's this perception that there's a whole cottage industry and where data is being requested. And if your members have deployed capital, they will ask our members for that data if the regulator is asking for it. So there's a whole sort of line here in terms of who's got to deliver it. But actually, the reason why that's been requested and what they're going to do with that data, I don't think that's anywhere near where it needs to be, because it seems at times that let's request some data, but then it goes into a black hole. And it's quite interesting that your analysis shows that that is seen as quite disruptive. So I suppose my next question around that same theme is that, number one, should perhaps the regulator look at, okay, we have a big 25% target, but how much of that 1.2 billion could be met by identifying all low-hanging fruit initially? Question, right? And the second part of that, I would ask sort of your comment on is the industry, and more particularly the regulator, moving quick enough?
Well, those are great questions, Mike. If we're to hit the government's own 2029 target, I don't think industry or the regulator is moving quickly enough on this. And that will be a problem for the government ultimately, because I would imagine they're going to look to bake in some of these savings, which are not just for financial services, it's right across the economy. They'll want to bake in some of those savings into their economic forecast. In terms of how do we identify low-hanging fruit, I think there is an opportunity there around that distinction between the commercial and wholesale side versus the retail. That's where I think there's an opportunity. But beyond that, one of my suggestions to government has been, take what you've already got, which is the regulatory initiatives grid. I don't know if you've heard of this thing, but it's about 60 pages long. It's published every 6 months. It brings together all of the proposed regulation. So the 60 pages isn't even the regulation, it's just the summary of the proposed regulation. And my suggestion to government has been, take that document and ask the regulators to include their estimated cost for each one of the proposals. That's not saying those proposals shouldn't be implemented, but I think when you can look at it in aggregate, that allows the regulators and possibly the government also to reflect cumulatively, do we think over this 12 to 18 month period, we want to introduce the aggregate cost of X billion across the UK financial services sector? And I say that because I think it's a bit like approaching it as you would in a business. You look at how much cost do you want to put towards your innovation, how much towards your mandatory compliance change, etc. I just think it would facilitate a different kind of conversation and reflection with the regulators if they included those figures. And I think that would be a really important step forward. And in theory, they should be able to do that for the next iteration of the grid.
Have you had a response from that? That sounds a great idea.
Well, the minister took a note, Mike, so I don't know what will come from that.
Okay. All right. Well, if I meet him, I'll follow up with the same question, the same idea, and I'll steal what is a fantastic idea. Okay, so let's move away from budget and regulation and talk about something which I know you're particularly passionate about. So let's talk about talent. Okay, so and the need to both retain and attract the next generation talent into our industry. And I've always asked this question with a number of sort of my guests, and there tends to be a little bit of an acceptance that we might have been a bit asleep at the wheel, number one, in terms of us as a sector, financial sector. And number two, perhaps we don't shout enough around what a great industry sort of it is to work in terms of with long-term friends. So please share your view in terms of talent, what the ABI does, what do you think we can do more? Because when people like yourself come onto MGAA Conversations and talk about talent, I know it's something all our listeners are very, very keen to listen in terms of someone of senior as yourself, your own views.
For the ABI, we have a number of initiatives in train to encourage the development of people already in the industry, but also to attract people who perhaps never thought of insurance as a career to come in and join what I believe is a sector that truly has a societal purpose at its heart. So some of the initiatives we have are things like our DEI blueprint. We launched that a couple of years ago with a very ambitious mission statement. We wanted to say, loud and proud, we want the insurance sector in the UK to be the most diverse, equitable and inclusive of the UK economy. And we are publishing progress against that. Yeah, we're publishing progress against that. And the latest update is going out at the time of recording, so in December 2025. And the blueprint is structured across 3 pillars. It's looking at attract. So how do we attract people into the industry, both at apprentice and graduate level, but at all levels, really, because we've identified that sort of the middle management, that where is the fresh talent coming from other sectors that can help bring in new types of skill that we feel that the industry is going to need going forward, particularly as we move in the direction of greater use of AI and generative AI in particular. So we've got attract, then we've got grow. So how do we grow and develop the people who are already in the industry? And then the third pillar is advance, which is how do we measure the progress that we're making and accelerate that going forward. And I'm really proud of the work that's gone into that. My team are very passionate about it, and it's really making a difference across the industry. In terms of training, we also have a program called Future Leaders, and that is something that we now run annually. And the 2025 cohort actually had its closing session just last week, and they were joined by Claire Williams, who's the former Formula One CEO, and she was in conversation with Stephanie Ogden, a former future leader herself, now CEO for UK and Ireland of HDI Global.
Yeah, I know Stephanie. Yeah.
So I think that's a great example of how the ABI's programs help people to build the confidence and skills as well as the connections to support their career progression. But I do think there's more that we can do. To your point earlier, are we as an industry talking loud enough about the opportunities for a career within our industry? I feel very strongly that, particularly for young people, a career with purpose is what gives meaning to one's profession and one's personal experience as well, because we spend a lot of time at work, whether that's in the office or hybrid. And when I compare insurance to other parts of the financial services sector, I feel that we have a much stronger purpose in our DNA. It's like in a stick of rock, purpose is very much it runs through the DNA for insurers. If I compare that, say, to banking or asset management, no disrespect to banking or asset management, but I really think when I engage with people across the insurance industry, it's evident to me how much they do care about their customers. They do care about the role that they're providing to society. And I think if we as an industry could collectively communicate that, it would be incredibly powerful, because people want meaning in their work. And I think there are very few careers that have more meaning than insurance.
Well, I don't think you could put together a better case in terms of promoting our industry, and it's great to hear sort of. So I really like what you're doing in terms of the middle management piece, because as we're both aware, a lot of that middle management was lost sort of during COVID, wasn't it? Where there was a real sort of drain from people who had that experience. So I think what you're doing in terms of that to try and bring that back, I think is so important, because you speak to, my members, you speak to insurers and actually speak to brokers, very importantly, that they feel there's been a real gap sort of. I know COVID's a few years ago, but there was a lot of people decided to take the opportunity to exit the industry who had a wealth of experience and knowledge, and it's so difficult to actually replace that because the next generation don't have that experience or knowledge or whatever. So it's great to see that initiative. So congratulations on that. Again, coming back to the MGA members, I know some of my members have joined the ABI. I think CFC were the last ones, I believe, who joined. What can the ABI offer sort of MGA members? Big opportunity for you to promote the ABI today.
Oh, that's very kind of you, Mike. Well, I think what I see when I look at the sector, the sector has grown over time, and you've therefore got a number of trade associations representing different parts of the industry. And I think that's absolutely appropriate, because each part of the industry has got its own specific needs. But what the ABI can offer is more of that umbrella perspective covering the ecosystem as a whole. And we have a powerful voice when it comes to shaping policy and making sure that our members' priorities are heard at the highest levels of government and of the regulators. So when a firm like CFC, or our latest new member is Somerset Bridge, when they choose to join the ABI, I think it's a sign of the value that we bring to the whole insurance ecosystem. And our advocacy is underpinned by robust data and analysis. And that means our positions are always evidence-based, and we take the time to go forward with constructive solutions. I think that's always very important when it comes to engaging with governments and the regulator. We've talked a bit about our training programs, and I think that's an opportunity for peer learning as well, because we're now convening at a functional level. We've got a CRO forum and we've got a CISO forum, and then we have initiatives like our DEI blueprint. So all of our activity is focused on supporting our members, but more broadly building trust in the sector, investing in people and planet, which is part of our ABI strategy, and creating an effective market. And that means making sure that the rules work for our members as well as their customers.
Fantastic. Well, I'm sure a lot of our members, if not all our members, will listen to this. So you may get a few more sort of join in as a result of this podcast. So there we go. So I was delighted sort of earlier this year to sign a memo of understanding with the ABI. I think it's great when sort of different sort of associations sort of formalise that sort of relationship. And I've got one with yourselves and one with BIBA, which I think is a great sort of for optics for both our members and for the market, because so that we're working collaboratively. What are you hoping we can achieve next year between us, Hannah?
I think since we signed the MOU, Mike, that we have seen greater collaboration between our two organisations. And a good example of that is the roundtable that's coming up on fair value, where we're going to be bringing together a broad group to explore the process of how can we make that process for determining fair value more efficient, or as efficient as possible. So I'm hoping that going forward, we'll be able to continue sharing insights and information on retail and commercial issues, on regulation in particular, and avoiding duplication for our respective memberships, because I do think that's something that members expect of the trade bodies. It's quite a diverse landscape out there. They want to make sure that we are collaborating, that we are cooperating and amplifying message where that's appropriate, but equally that we're not duplicating effort where we don't need to. So I hope more of the same, Mike. But I'm curious, what's your perspective? What would you like to achieve?
No, I think that fair value is a great example. I think there we have within our MOU the opportunity for some of my members and your team to perhaps sort of do a more intimate roundtable just to see where some of the issues which my members may have, that your team will be able to assist in terms of your members. So I think we're likely to look to schedule one of those in 2026, which actually probably gets perhaps more forensic around some of the areas which both our members can sort of work together. So I think there's a great opportunity, and really looking forward to working with you sort of and your team sort of in 2026. And again, certainly I think you'll probably support a message on terms of this podcast is that if there anything specific topic wise for which your members and my members would like to sort of get in a room together, then they've only got to contact either you or I or our respective teams, and we can make that happen. So that's the whole point of these sort of conversations at the end of the day. Excellent. Okay, well, look, we've managed to cover an awful lot, from budget, regulation, training, young talent, weather, and whatever. So it's been absolutely fantastic to sort of discuss with you. So just finally, Hannah, in the hope that in 12 months' time we sit down again and have this conversation, what would you hope to be able to be sharing with me in terms of what the ABI would have achieved over the next 12 months?
Well, building on what we've already discussed, I'd certainly like to see real progress on regulatory reform and more young professionals and future leaders coming through that talent pipeline. But I think there's another important aspect that we've not touched on in detail today, and that's around cyber resilience. And I think that is increasingly important, and an area where I believe the insurance sector has a key role to play, whether that is providing cyber insurance as a service, so helping with the basic cyber hygiene for those SMEs and mid-sized businesses that choose to take out cyber insurance, or whether it's helping after the event. I think there's a great opportunity for us to do more, and I'm keen to see progress on that front over the course of 2026. I was delighted that we welcomed the Chief Executive of the National Cyber Security Centre, Richard Horn, to the ABI's annual dinner in October, and I hope very much that we can continue to strengthen that relationship, because I think it's very much to everyone's benefit if we have a thriving ecosystem that can support cyber security and cyber resilience at all levels, and that will require cooperation and collaboration, not just across the industry, but with government stakeholders as well.
A point very, very well made. Certainly with the co-op, with Marks and Spencers, with Jaguar Land Rover, all these areas all happening in the same 12 months. I think your point make is extremely valid. Hannah Gurga, Director General of the ABI, many, many thanks for sort of sharing your thoughts with MGAA listeners and conversations. And it leaves me to wish you a fantastic Christmas and a very happy New Year. All the best. Thanks for joining.
Thank you very much, Mike. Thank you. Bye-bye.
Many thanks for listening. We welcome all feedback, so please get in touch with your suggestions on topics and future guests. Please don't forget to subscribe on your chosen platform so that you don't miss out.